Good morning. This is Tom Alexander. It is Sunday, March 23rd. This is the weekend update for the U.S. stock indices for the week of Monday, March 24th. A couple of early comments here. We're coming off of a triple witch option expiration. So we'll see how the pinning effect of that expiration unfolds here, or the unpinning, I should say. Now, we have a more free trading market that won't be as affected by that triple witching. We'll see if that has an effect. Maybe it does, maybe it doesn't. Another thing that I will point out that you probably are aware of, this is about as noisy an exogenous backdrop that we have had in many years in the indices. We have a lot of economic uncertainty. We have a lot of policy uncertainty coming out of the government. This is not a political statement or value statement. It's just a statement of fact. The markets are uncertain about policies that are going to be enacted, might be enacted, the effect of those that will or will not be enacted, et cetera, et cetera. So, frankly, I don't. It doesn't affect the way I trade. I trade using auction market principles. I trade price action through the lens of auction market principles. There is nothing more consistent, nothing more objective than letting the market and price action dictate your actions. And that's all the information you need. Okay. Real quickly, if you would like, this is free. If you found me through YouTube and you're not getting my notifications that this is up, please subscribe to the channel. Please like the channel. If you're finding value, you'll get notifications when I post something. Also, if you want to get my free reports that I occasionally send out that are not on YouTube, shoot me an email at tom@alexandertrading.com. I will put you on the list. I do not sell my list. I do not spam my list. You're not going to get 700 emails from me a day. I'm too busy for that. I do actually trade. Okay, this is the website, alexandertrading.com. You can go to the website, click on weekly update, and you will see the weekend reports for several years going back, as well as special reports. If you click on those reports, you will see the charts that I'm about to show you. You will see you can download a PDF and if you choose, and you can print that out and get the levels, etc. So, all right, let's take a look at some charts here, okay? Let me make sure we're showing the right screen, which is always helpful. Yes, we are. Okay, we'll start with the SPX. And the levels you see on the screen are the important levels. We're just below this 200-day moving average, which is coincident with this high here. Why is this level important? Well, you have three tops here. This was a level that broke down in here. So this 57.15 area, which was the high from last week, is important. Last week's low is important. If, hopefully you can visualize the Gaussian shape here of a market profile structure, and we traded roughly at the midpoint of that structure. How high could we go? Who knows? I don't know. No one knows. This is an area, again, that this general area up in here was an area that was important on the way down. It took a while to get through it. It might take a while to get back above it. We shall see. But these are the levels as we head into early next week. Let's take a look at the NDX. Similar situation, almost identical market structure, almost identical price action. The SPX and NDX, as you are well aware, are driven by the MAG 7 up and down. And it's why those indices, the price action is exacerbated by and is greater than that of the other indices at the moment. Let's look at the Dow. And the Dow had a little bit wider range last week, but it also stayed in a range. You could make a case it has been in balance also. So here are the levels for the Dow. And then the Russell, similar situation in the Russell. New York Composite is showing some relative strength as it has been. As you can see here, it really didn't break down below this level on this last dip, and it's above its 200-day moving average. And then the equal weight S&P, that is the 500 stocks in the S&P, but equally weighted as opposed to cap weighted, and you can see it's showing relative strength. So that's where we are as we head into the week. Are we in a bear market? Are we in a bull market? You can make a case either way. I am a short-term to swing trader. I will trade intraday. I trade uh, swing trade. I'll trade 3 days. I'll trade 3 or 4 weeks. Uh, Occasionally, I might have a trade on for a month or so. I'm not interested in calling the next great bull or bear market. You can make a case either way. It's too early to say that we're in a bear market. We very well could be. This next rally is going to be interesting. Now, are we in the beginning of that rally? I think we're going to find out pretty early next week. All right, let's take a look at the internals. VIX dropped last week. It reached a high of somewhere around, well, below 30, the upper 20s, which is elevated slightly, but no big thing, at all, really. And then let's take a look at our internals, NYSE data, NYSE advancing and declining issues specifically. The red you see here is a 10-day moving average of NYSE advancing issues. Green is a 5-day. The blue is a histogram of closing breadth. We have had one negative 2,000 closing breadth day since August. I think we had two last year. No, we had three. We had one in February, one in August, and then one in December. So we had three last year. We've had none so far this year. If we get in a bear market, you will see multiple negative 2,000 breadth days. It is really interesting that we declined 10% in the SPX and considerably more than that in the NDX and did not have a negative 2,000 breadth day. Obviously, that's because the Mag 7 were the big influencers of the price action to the downside. So we're set up here, guys. This market could move sharply either way. We had a 3% bounce off this low. That is a really tepid bounce for a decline that occurred this sharply in this amount of time. So it would not surprise me at all to see an attempt to rally further next week. You guys have a great week. And again, if you found value in the video, please like, please subscribe. I will talk with you again very soon.